Good morning, everyone. Today we are going to discuss our group company analysis for Planet Fitness. Myself, Nadir Salim, and my colleague Samantha will share our findings about this company. Welcome to Planet Fitness.
We will step through an industry analysis, Porter's 5 forces, trends and changes in the industry, a company analysis, and insights and recommendations that we have for the company. We will then post discussion board questions along with this presentation for the class to use for this week's discussion. For the industry analysis, I'm going to step through an industry overview, economic data associated with the industry, and competitors of Planet Fitness. Planet Fitness falls within the fitness and recreational sports centers category. This industry features exercise and other active physical fitness conditioning or recreational sports activities, such as swimming, skating, and racket sports. Operators of these facilities are also involved in facilities management and fitness instruction. Products and services that are most often offered by these facilities are membership fees, personal training, guest admissions, meals and beverages, merchandise sales, and spa services. Currently, nearly 40% of the United States citizens hold gym memberships. A defining feature of this industry is low market share concentration due to the vast number of businesses operating in this industry. Digging into the industry further, we see that as of 2023, there was over 115,000 businesses and nearly 900,000 employees within this industry. From 2018 to 2023, the number of businesses in this industry grew over 2.5%, despite the overall market declining nearly 7%, likely due to COVID forcing many businesses to close their doors for extended periods of time. Looking towards the future of this industry, it is expected to see growth rates that near 35% through 2028. Below are a few of the largest competitors Planet Fitness is competing against among the well over 100,000 businesses I mentioned earlier. 24-Hour Fitness has one of the highest revenues in the industry of $10.8 billion. This company was founded in the early 80s and now employs over 7,500 workers. LA Fitness is only a quarter of the size of 24-Hour Fitness based on revenue alone, but they employ over 5,000 more workers than 24-Hour Fitness does. Lifetime Fitness is again smaller than 24-Hour Fitness and LA Fitness, with $1.8 billion in revenue and an estimated 36,000 employees. Gold's Gym is by far the smallest of these competitors when measured by revenue, with only $580 million a year in revenue. For perspective, Planet Fitness was founded in the early 90s, is close to the size of Gold's Gym with around $590 million in revenue, but with less than 2,000 employees. This indicates that compared to some others in the industry, they can generate more revenue with less headcount. Moving into Porter's 5 forces, I will analyze competition, potential of new entrants, power of suppliers, power of consumers, and threat of substitute products. Competition in this industry is high. The competitive landscape is made up of a fragmented market where no one single company dominates the market. As mentioned earlier, there are over 115,000 businesses as of 2023. The more competitors in a market with like products, the less consumers are willing to pay, which lowers margins for companies. Planet Fitness can try to reduce competition by working to create a competitive advantage, work to have economies of scale, and find ways to increase the size of the overall market. These actions can help drive margins up and either increase the amount of the market that they own or increase the overall size of the market, which can increase income. A large number of competitors in an industry, like what was discussed on the previous slide, increases the threat of new entrants. Combine this with a relatively low cost and time requirement to enter, and the result is a high threat of new entrants. Startup costs for a gym range from $50,000, which is pretty cheap, all the way up to $1 million. The scale of time that it takes to start one of these businesses ranges drastically as well, from a few months to even several years. Planet Fitness can work to reduce this threat by offering new products, building new capabilities, and investing in R&D to create a dynamic industry where consumers have really high standards. Supplier power in an industry is determined by the number of suppliers, key inputs to goods and services, how unique the inputs are, and how much it costs companies to switch suppliers. Currently, there are roughly 250 suppliers of fitness equipment in the United States. Suppliers are more reliant on labor than capital in this industry. They experience a medium market share concentration, and the number of suppliers has actually declined by almost 0.5% from 2018 to 2022. As these shifts in suppliers have occurred, their power has actually increased, while Planet Fitness's power has decreased. If this continues, companies could experience suppliers with high power, which will likely drive up costs and make it more difficult to switch. Customer power is determined by the number of buyers in an industry, how significant each customer is to that industry, and how much it costs a company to find new customers. Customer power within this industry is low, as there's an estimated 88 million gym goers who spend an estimated $34.5 billion on memberships each year. In general, there isn't one single or one small group of customers that are really significant, and in general, it doesn't cost companies a lot to find new customers, given that there's 88 million gym goers each year. Given the low power of customers, Planet Fitness doesn't really need to worry about acquiring new customers, but they should still focus on maintaining their customer base and creating value for these customers. They should do this by continuing to offer new products and focusing on the volume of customers to maintain high sales, given that they have a low price model. The threat of substitutes in this industry is high, as there's many close substitutes to what Planet Fitness offers. This limits the ability of Planet Fitness to increase prices and get more favorable terms with their customers. Potential substitutes have actually increased in popularity as COVID has continued to change consumer patterns. Substitutes for Planet Fitness include things like outdoor fitness activities, free classes at community centers, and at-home gyms and workouts. All of these threats of substitute products could be really detrimental to Planet Fitness. Planet Fitness should work against this by limiting the ability of consumers to go to these substitutes by increasing switching costs. They could create value through focusing on customer service, and they should just focus more on the consumer's needs in general and focus less on just selling. Now that we have completed Porter's 5 forces, we will move into industry trends that we're seeing. There's many trends within this industry that have increased in prevalence, especially with the onset of COVID-19. As mentioned earlier, there was a sharp decline in revenue within this industry in 2020 through quarantine, as gyms were forced to close their doors. Trends have gained significant traction in this industry for that reason. One major trend we have seen is wearable technology. Consumers are purchasing devices like fitness trackers, smart watches, and heart rate monitors. They are then counting steps, tracking heart rate, tracking calories. They're tracking how much time they spend sitting each day. They may look at sleep, blood pressure, respiratory rate, and a large number of other health indicators. Two other trends that took off due to COVID were home gyms and outdoor activities. Home gyms can range from minimal to no exercise equipment to full-on studios that an individual or maybe a family uses. Manufacturing has actually followed this trend by producing equipment that's specifically designed for home use to make you feel like you're at the gym and that you're still with other people. We see this, for example, with Peloton and the live classes they offer that make you feel like you're in a studio without even having to leave your home. The popularity of participating in outdoor activities has also increased. Consumers are spending more time doing outdoor recreation activities like gardening, camping, running, and hiking. All of these changes, like I already mentioned, could be really detrimental to Planet Fitness and the revenue they're able to generate. As people stop going to gyms as much and move towards these home gyms, wearable technology, and outdoor activities, Planet Fitness really needs to think about how they're going to continue to maintain this consumer base and attract new consumers through their offerings, whether it be their gym or maybe offering new things like physical trainers or classes at home.
Thank you, Samantha, for your great work. Now I'm going to talk about Planet Fitness' current and historic financial position, and I'm also going to go through companies' key financial ratios such as return on invested capital, current ratios, return on assets. That will indicate how good or bad this company is performing, and what kind of current position, financial position this company has. And I also gonna talk about our finding and recommendations. Our mission statement is to enhance people's lives by providing a high quality fitness experience in a welcoming environment, which we call the judgment free zone, where anyone, and we mean anyone, can feel they belong. The mission statement indicates that the primary focus of the business is the customer. It also shows that its business model is all about changing the status quo by bringing a new feel in the health and fitness centers. Our vision statement can be adopted from the purpose of the company, which is to provide a workout environment in which anyone and everyone can be comfortable. This statement highlights the desire of the company to distinguish itself as a role model for the rest of industry by creating the best fitness environment. This is what leadership is all about in this industry, something that Planet Fitness has mastered over the years. This statement has two main features: providing an ideal workout environment and make everyone comfortable. Let's take a look at company overview. Current CEO is Christopher Gironde. This is a public company founded in 1992. Current employees are 1,616. Currently headquarters Hampton, New Hampshire. Current revenue is 587 million. Net income is 42.7 million. Gross profit is 486 million according to 2021. EBITDA 191.6 million 2021 according to 2021, and PE ratio is 1 to 7.04. Market capitalization is 5.4 billion. Total assets are 2.16 billion approximate dollars, and ticker symbol is PLNT. This chart shows Planet Fitness annual revenue growth over the time. When we look at 2014, the company was sitting at 279.8 million, and it's jumped from 279 to 333.5 million in 15, and gradually improve its financial growth in 16, and from 16 to 17. 378 to 429 million is a significant growth. When we compare 2017 to 2018, we can see it's quite a jump between 1 year for 429.9 million to 572 million. And from top year was 2019, where company made 688.8 million. Definitely 2020 was pandemic year, and there was big crunch for every business, include this company. Company just made 406.6 million in 2020, and it's bounced back in 2021 with the 587.0 million. This graph indicates the percentage growth of this company from 2015 to 2021. Here we can see clearly in 2015 company was sitting at 18% growth, and from 2015 to 16 there was 14% growth, and gradually company went up to 33% growth in 2018, and 2019 company grew 20 extra percent, and in 2020 due to pandemic company just slide down deep down, which was a 41% crunch, and bounce back 44% in 2021. This chart is all about profitability. Here I compare trailing 12 months with the last 5-year average. We can talk about gross margin, operating margin, pre-tax margin, and net profit margin. When we compare Planet Fitness with last 5-year company's gross margin was 56.85%, and in this current year 56.37%, which is slightly down. Operating margin was historically 30.39%, and current year is 26.81%. Don't forget 2020, because there was big crunch. That's why we see this slightly different number current year. Pre-tax margin was 30.53%, and last year 13.68%. When we talk about net profit margin, historic last 5-year company made 11.67%, and this last 12 months company made 9.14% net profit margin. This chart shows how effective this management is. When we look at how this company is using equity, their assets and investment, and generating revenue. When we talk about return on equity can be defined as the amount of net income return as percentage of shareholder equity. Return on equity measures the corporation profitability by revealing how much profit a company generates with the money shareholder invested. When we talk about ROE is currently negative, which is not good. When we talk about return on assets look good. Company is using its assets and generating revenue, which is 2.7%. It's look good. When we talk about return on invested capital, how we calculate invested capital is we take earning before income tax and divided by average invested capital and multiply by 100%. That gives us the current number, which is 7.05%. If we invest in this company, and we can get 7.05% out of it. As you can see, this graph shows us a company's current liabilities and current assets and current ratio. When we talk about current assets, mean how much money company currently has in different shape. It could be liquid asset, it could be fixed asset, which is not long term, which is short term, and how much company owe short term, not a long term. When we look at these, we come to know company has more assets than their liability. Their liability is less. Company owe less, and they have more assets as compared to company debt in short term. Current ratio is 2.09%, which is a pretty good. Just means that company owe less than they have. Here is the snapshot of company net operating cash flow from 2017 to 2021, and you can see company gradually has more cash flow from 2017 to 2019, and due to pandemic in 2020, company has no money as compared to last 3 years, and it bounced back in 2021 well over $182 million. And when we talk about 2021, company expenditures was 54.07 million, and company has free cash flow of $135.22 million. This chart shows recommendation trends from different analysts, financial analysts, and we took this information from Yahoo Finance to give us an idea about the financial projection and valuation of this company for last 4 months. In November, December, January, and February. In November, 12 financial analysts analyze all data, and which indicate, 5 out of 12 was recommending to buy this one. And if we talk about December and January, 7 out of 17 were recommending this company to strongly buy. And now in February, which is last current month, is still strong buy. When we talk about all other financial people who are interested in their investments. Here is our value stick factor, the new blue strategy: willingness to pay and willingness to sell. WTP, when we talk about WTP, it's solely customer intention, and we figured it out, these 5 main factors: self-demand, social influence, facilitating condition, performance expectancy, effort expectancy. Physical environment is willingness to sell, switching cost, customers value, customers loyalty, customer satisfaction. When we talk about self-demand, it's solely on customers intention. I'm going to give you an example. When we talk about young people, they are more curious and more concerned about their physical appearance, because a good appearance can increase their attractiveness, right? At the same time, people who often participate in sports, or who like to participate in group activity, may have more opportunity to show their strength or figure to the outside world. Therefore, this is proposed that we should add self-demand in this our value stick toward WTP. Social influence, definitely. If for instance, I'm a young person, and other person is physically well maintained and well built, that influence me to join a fitness group or fitness club. And other factor is facilitating condition, how easy to get into uh, that facility to make myself as good as other person look. And performance expectancy is one factor as well, effort expectancy. When we talk about willingness to sell, from business perspective, physical environment is most, I believe, most effective. And the second, switching cost. In Planet Fitness case, they have best valued plan. It's $10 plan, hard to switch for people. Even I use or not, I don't care about $10. So it's definitely hard to switch, and the company is generating revenue by offering that kind of plan. And in this company, customers value, when we talk about company's mission and company's vision, that was all about customers value. And plan like $10 plan gives customers loyalty and customer satisfaction, that they are not spending more money to join this company, right? And no one's care about the $10. Even average person go to gym approximately 2 to 3 times a week. My research shows average in this company, average person just visit 6 visits in a month. Whoever has a $10 plan, and they never bother to cancel their membership from this company. So that's pretty good. Let's talk about how is the company facing trends and changes in the industry. We're gonna put together a few factors here. Online platform provides subscriptions, group classes, variable enhancing home fitness, social media, corporate wellness retreat. All these things has impacts, and we calculated, come up with their impacts as well. When we talk about online platform uh, subscriptions, that is convenience. Impact is convenience, because I can be anywhere in the world and join activity online. That is convenience. Group classes, when we talk about group classes, one coach can guide us, and we can be part of that community, that gives us the feeling of integrated to fulfill our goals. And impact is high. When we talk about wearable gadgets nowadays, such as smartwatch, right? That enhance individual effectiveness in fitness industry. That is completely all about satisfaction. I'm going to give you example, like a smartphone. We can download app. Smartwatches, we have watches everywhere nowadays, and that compute how many steps we take, how many jumps we have, how many kilometers we walk, what kind of temperatures our body has, and what kind of things we need to do to improve our fitness. When we talk about social media such as YouTube, we can be at home and look at and join the community and watch and learn different exercises that is also influence us. And the competitive ways, there are millions of videos online. We can figure it out which one is best for us, and we can compare. And that kind of activity gives us, as a company or as an individual, a competitive edge that boosts our competitive spirit. When we talk about corporate wellness retreats, impact is high, because greater team productivity and team spirits that provide us. Let me tell you about our insight and recommendation. We come up with the three main points. Add services, workout classes, incorporate outdoor space, virtual training and classes about this company that gives the value created in this company. Focus on true customer needs rather than selling. Focus on customers of quantity of membership. Invest in innovation to improve customers' experience. Finally, we have a few questions for discussion board. What to expect in the future for health and exercise professionals? What will be the future of personal training? What will be the future strategy of group fitness with the growth of digitalization? Is this fitness industry transformation positive as a community? What does this mean for you?